All right, all right, all right. Okay. All right. Hello, people, and welcome to another interesting moment. All right. So, as we know, it's the CPI live stream, and we're going to be talking and looking into what the market has in store for us as regards the CPI release for today. All right. So if today is your first time here, all right, please do well to like and subscribe to this channel so that you can always get top-notch content from us that would assist you in getting the best out of your trading journey. So today, as we prepare for the CPI figures that are going to be released in a couple of minutes, permit me to prepare your minds for what exactly we are expecting to see in order to trade the CPI. Okay, if you check your calendars, you'll discover that the CPI, there's the month over month, all right, and then there's the year over year performance of the CPI, both of which have been forecasted to get to get worse. All right. However, core CPI is indicating that it should go bullish. Now, what this means is that on the chart, there's going to be a bit of a discrepancy at first. All right. However, when we're able to observe a spike in a particular direction, all right, all we need to do is follow the direction of that spike. Okay. For some of you who are probably familiar with fundamental markets trading, all right, you'd probably be talking about things like straddle trading strategies. All right. However, for the purpose of what we're going to be doing today, we're not going to be doing straddle strategy. All right, but we're going to be looking at the markets in a somewhat similar way. Okay, in a somewhat similar way, and I trust that you guys are ready for some really amazing moments. So also, for those of you who are on this stream right now and you're not on the Telegram channel, please do well to join the Telegram channel. The link is in the description, because when you do, it's going to give you access to trade ideas, access to educational resources, educational materials that can assist your journey as a whole. All right, and I am personally looking forward to having you join us on the FBS Analytics and Education Telegram channel from right about now. Okay, so without further ado, let's go into what the CPI is looking like. It's important to note that previous CPI for last month was lower than expected, and as a result, we saw the dollar take a nosedive from that moment. Okay. However, when you look at the US dollar chart, okay, and you also consider the fact that the dollar is currently in a downtrend, okay, it simply means that what we can expect is that the dollar most likely continues to get weaker. Okay, because we're not seeing any solid reactions from the dollar at the moment. Okay, there's been no solid reactions from the dollar at the moment. However, we want to see how this plays out. Okay, the dollar on the chart has been ranging quite heavily, okay, which means that there could be some major moves about to happen. So on my chart right here, you can see I have a chart here. This is USD card all the way down here. We have this demand zone here, all right, on USD card. As far as Euro USD is concerned, on the 4 hours time frame, price has broken above the previous resistance, okay, which means that we might be getting to see some continuation of the bullish structure. All right. GBP USD on the 4 hours time frame, I think we have a supply zone somewhere around here. Okay, and then for gold, let me check that on the 4 hours quickly. Gold has also broken structure. Now, this also goes to confirm or to corroborate what we saw, all right, on the calendars, which is simply indicating that there's a possibility that the dollar either gets weaker or stronger, which is quite confusing. And that's why I said what we'll be doing today, in essence, is we'll go to the 1 minute time frame, okay, and what we're waiting for is a major market spike, all right, and as soon as that spike has some bit of retracement, we're looking to jump right into the trade. Okay, and this is 221. all right, which means that we have a few minutes. All right, we have a few minutes to go, and that's an impressive one. And then we're just going to wait to see how this plays out. And mind you, if you have questions that you would like to ask about, whatever is going on my screen right now, please do not hesitate to type that in the chat box. All right, and your questions will definitely be addressed. Okay, your questions will definitely be addressed. So let's do that right now. Okay, I'm trying to see how this is going to play out in the next few minutes. I'm trying not to predict, all right, even though it's exciting to predict the market and then have the market go your way, but I'm trying my best to hold back my emotions so that we can stay strictly with whatever the market presents us. Okay, so we have 5 more minutes. We have about 7 minutes to that publication, so we're just going to wait and see how that plays out. In the meantime, if you have a question, please do type that in the chat box. Okay, and I have this template set up on my charts right now because the last time we had news release like this, we were only able to trade on the gold. All right, we're only able to, no, I think it was Euro USD. Yes, it was Euro USD. Okay, and we missed out on some other commodities. All right, so today we're going to be doing Euro USD, GBP USD, USD CAD, and gold. All right, so all 4 together, and then we'll check what direction does the market spike towards, and then we can trade in that direction. Now, the reason why we're waiting for, sorry, let me slow down a bit. The reason why we are waiting for that spike is because, you see, that spike is going to be communicating to us what direction market volume is pushing. All right, it's going to tell us, all right, an increase in volume just happened in this direction. Okay, in this direction, and that direction becomes what influences our own trading decision. So we just literally follow the direction that just experienced the surge in market volume. Okay, so that's what we're just going to be doing in essence. All right, and if this is your first time attending a stream like this, please sit tight. All right, make sure your hands are at the ready, because we're just going to be taking a couple of trades here together, maybe in the next in the next 5 minutes. Okay, and I hope that you are excited, as excited as I am. Okay, so let's see. If you have questions, please do not hesitate to ask. All right, and I would really appreciate if you guys can give a thumbs up right now. Okay, I would really appreciate if you guys can give a thumbs up right now. Okay, so let's get right into it. I'm still waiting to see questions. All right, I'm waiting to see your questions. I'm hoping that we get to make some Benjamins of this CPI release or the CPI broadcast. Hold on. Yeah, it's good to see some of my old friends again. It's good to see you guys. Thank you for joining this stream as well. Okay, all right. Okay, so we're just waiting. All right, in the next 5 minutes we'll have that, and then once we have that, we're going to be able to push further into whatever else the market has for us. Okay, please just hold on. I'm trying to set up now. Let me quickly say this. When you want to trade the news successfully, okay, one of the main things that is important to realize is that the direction of the news, all right, is not always going to be long term. Okay, sometimes there's a news release that only just tweaks the market a little bit. All right, it doesn't get to push the market for maybe 4 hours or 1 hour. All right, sometimes when the news is released, okay, it only gets to move the market for about 15-30 minutes. Okay, and you don't want to get stuck on a particular direction, insisting that this is the direction market just has to go. Okay, so because of that, it's important that you get that clearly. All right, so what we're going to be waiting for is that direction. We'll trade it a little bit, and then everybody can, take a rest. Okay. Personally, I think my bias is that the dollar is going to become stronger. That's my bias. All right, and the reason why I'm saying that is because currently the market direction is already looking like dollar is weaker. We have EU going bullish, we have GU going bullish, USD card is bearish, gold is bearish, gold is bullish. All right, and we're having all of this that is beginning to make people feel like, oh yeah, dollar is going to be weaker. Okay, however, from experience, most times when there's a news release, it takes out those who try to predict it before it happened. Okay, so there's every possibility that this current movement you're seeing is just a false movement with the intention of gathering liquidity, taking out liquidity, and kicking a couple of people out of their trading positions. Okay, so let's just see how this turns out. Let's see how this turns out. I am really excited. We have about 2 more minutes. 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 Who's ready? Well, it's not CPI gambling. We're not gambling per se. We're just trying to predict, and not even predict anymore. We're trying to react as quickly as possible to whatever the market presents. All right, so this looks like a bullish spike, but the news does not seem to have been released just yet. All right, it doesn't seem like the news has been released just yet, or probably I'm the one behind time. But like I said, you can see we have spikes on Euro USD, GBP USD right before the news got released. Okay, and what this usually means is that the market is preparing some heavy movements. So let me just see. Let me see. All right, beautiful. So I think we've gotten that initial spike. I'm not sure if this is if this is real, but let's see if that's correct. I'm gonna try and see. I'm going to give you guys a direction right now. All right, beautiful. Dollar is stronger. Dollar is stronger. That's the spike from the news. All right, so we'll wait for some retracement, and then we can quickly seize that opportunity. All right, we'll wait for some retracement, and then we can seize that opportunity. All right, beautiful. Okay, so let's see how this plays out in the long run. Yes, remember I said it before the news release. I was literally telling you guys that I'm expecting the dollar to get stronger. All right, I believe that I mentioned that, and even when the market started reacting, I made it clear that that reaction was most likely just a false movement, to get you guys to probably start chasing shadows. Okay, but like I said, dollar is stronger, and we can all see that right now. Okay, we can all see that right now. So if I wanted to take this trade, all right, my presumption would be that yes, dollar is stronger. We should be bullish on UCAD. We should be bearish on gold. We should be bearish on EU. We should be bearish on GU, and the host of others. All right, so let's see. It looks like we're already getting the retracement of that initial spike. All right, it looks like we're already getting the retracement of that initial spike. So let's see how this plays out. And now it becomes a patience game. All right, Now it becomes a patience game. Remember I said that CPI and core CPI were both looking contradictory. All right, so the CPI month over month came out as expected. The CPI year over year came out as expected, but the core CPI also came out as expected. Now, what is actually going to make the market really move bullish for the dollar is the that also came out at the same time. All right, because the unemployment claims is lower than expected, which means that there are lower unemployed people right now in the US economy. All right, the number is reduced, and as a result of that, we should get to see some similitude of strength, all right, for the dollar. Okay, so here comes the patience game. Now we've formulated our buyers, we've gotten the retracement, we can enter our trades, buy on USD card, sell on gold, sell on GU, sell on EU. But like I've always said, be sure that you are in control of your risk. All right, never risk more than you're willing to undo. Okay, don't ever do that. And as you can see, price has broken structure, on virtually all of these commodities. That spike broke structure on virtually all of these commodities. So whatever is left now is for us to wait and see how this all ends up. How this all ends up. So let's wait. Personally, I feel that we may be getting to see some interesting reaction on these commodities. All right, but let's see how this plays out. Okay, so there comes the retracement. And like I said, I told you earlier that, at this point where we have conflicting opinions, all right, from the news releases, the market is definitely going to act all crazy, all right? Market is definitely going to act all crazy, but let's see how long that lasts. Okay, gold just broke structure back up, but let's see. Dollar, USD card has also broken structure lower. Same thing on GU. EU seems to be the only one that is still reacting a bit nicely. Woo. Let's see. All right, at this point, I think GU is no longer acting like a retracement, but let's see what the higher time frame looks like. Yes, it still looks like it. Personally, for me, I feel that the markets right now is just reacting to the difference in the values, all right, from both news releases, all right. So we just want to wait a bit and allow the market settle down. Okay, once the retracement is fully formed, we can now start to say, oh, all right, this is it. For me, based on what I've seen on GU, on gold, on USD card, all right, it's already looking like yes. So let's see if USD card steps into this other block. For Euro USD, let me see. Euro USD, definitely structure is bullish on that one. All right, we just broke out, so that tells us that the retracement may not work, but let's see how this goes. So like I was saying, when you talk about how the market moves during situations where there's a conflict in direction, all right, this is a practical example of how that works. All right, CPI on other figures was exactly as expected. All right, however, we're beginning to see that the core CPI value is what is moving the market right now. Okay, but then there are still investors who feel like that is not an accurate enough basis, all right, for determining market direction. But let's just see. I'm trying to load up your comments, okay, so that I can possibly address your questions. All right, so remember, like I said initially, all right, sometimes market moves like this, all right, and when you have situations like this, it only makes sense that you take a break, all right, pause a little bit, and then allow the market to rebalance itself. Okay, allow the market rebalance itself. Currently my bias is still solid, all right. I'm still expecting to see some increase in strength for the dollar. All right, I'm still expecting it. That's still my bias. However, my entries have been violated, so I'm just going to wait to formulate other entries, all right, get new entries that I can work with. Okay, because sometimes this happens in the market. Investors or the market tries to shed off some weight, all right, shed off some weight, get some people out of the scenario, and then before it starts to actually really move. But like I said, we've gotten the general direction that market has spiked towards, so that basically informs what we expect. Okay, so for me, since we've gotten a break above these spikes, all right, it means that I really shouldn't be expecting so much from this anymore. So once price comes back towards the initial spike, I'm definitely closing my trades, and then I can wait for price to form new structure. All right, what do I mean by new structure? Let's look at USD CAD, for example. Okay, this was the extent of our spike. Started from here, ended here. All right, let me go to 1 minute so that this can be clearer. All right, so this is it. This was the extent of our spike, and right now we can see that price has broken above the spike, all right, which means that structure most likely has changed and could be bearish right now. So what we want to do is we'll wait for price to come back to retest and confirm the direction, and then from there we can decide, all right, let me close my trades and allow the market form an entirely new structure. Okay, if you look at the chart, you can see that the market is actually beginning to have some semblance of structure again, all right. But nonetheless, a lot of people have been liquidated already at this point. Okay, and that's why I always say ensure that you are in charge of your risk, all right. Whatever risk you're going to take that is going to make your heart start pumping haphazardly is not worth taking. Okay, because like I always tell people, especially my students, money or trading the market isn't something that you should do with your emotions. All right, so if your heart is beating so fast over a trade that you took, it simply means that there was an issue with that trade and you probably shouldn't even be in that trade. Okay, so give me a minute. I'm trying to load up your questions so that I can make efforts to address them. An issue with that trade and you probably shouldn't even be in that trade. Okay, so all right, I'm seeing. All right, can we buy on USD CAD? Yeah, and the Rafa, I'm actually as confused as you are. All right, however, my trading system is something that took me some time to perfect. All right, and since I did that, I can say pretty much with confidence that this works for me. Okay, I'm pretty confident in how it works for me. All right, and that's why you see that even though I had trades open, all right, I didn't close my trades because potentially there are only two things that can happen to me whenever I take trades. All right, it's either I am right and the market goes according to my expectation, all right, or I am wrong and I get to learn from the outcome of that trade. All right, so that's personally for me. And as you can see, yeah, I think the market is beginning to stabilize a bit. It's beginning to stabilize a bit. So at this point, if you've not yet entered any trades, all right, this would be my advice for you. wait for price to break out of this box. All right, wait until price breaks out of this box on Euro USD. All right, that's the 1 minute time frame. Okay, that's the 1 minute time frame. Or this box. All right, this box in the 1 minute time frame, GBP USD. All right, that's typically what we're waiting for right now. Or this box, all right, on Euro USD, which has on USD card, which has actually happened. All right, but we want to wait and see what this will look like. All right, and then for gold, okay, for gold, let's see. This is the area that we're watching out for. So what we're waiting for now is the breakout of this zone. Okay, that's what we're waiting for. So for me, if this breakout happens and then, you know, it doesn't go in the direction that I have already placed trades in, I'm typically or literally just going to close that trade, okay, and just you know, let the market rebalance, and then I follow the direction, the current direction of the market. Do I set stop loss? All right, like you saw during the you know, during the trades that I took, I really didn't set any stop losses, and that's because my stop loss for this trade is mental. All right, my stop loss for this trade is mental. I know how much I'm willing to risk on this trade. All right, and as a result of that, you know, currently my risk is still quite you know, quite within my capacity. As you can see, I was using let me show you what lot size I was using on that trade, because for those of you who saw that I took trades, you can see my lot size on this trade is 0.05. all right, it's just 0.05, which means that for each of these trades that I took, all right, my total risk is less than $50. All right, my total risk is less than $50. So as a result of that, I can say that I'm still quite safe because of the size of my account. All right, and that's why I said make sure that your risk is in is under your control. All right, you're in control of your risk. Don't risk based on your emotions and say, oh, this guy is an FBS analyst, I trust him, he knows what he's doing, he's 100% guaranteed to deliver profits. All right, I know that you trust me, and I'm happy that you do. All right, and I appreciate that gesture. Nonetheless, all right, the market is the market, and nobody is the boss of the market. All right, so as a result of that, that's why I am simply saying to you guys, always have your risk in check. All right, always have your risk in check. Okay, because for me now, currently this is about a 20k account. All right, and I am using 0.05, risking $50 per position, and I have about 4 positions open. Yeah, 4 positions. So that means that I am still quite in check. All right, my risk is still quite in check. Okay, I'm not going overboard on that account. All right, so that's why I just wanted to point this out to you guys. All right, so that you guys can always have that at the back of your minds when you trade scenarios like this. Okay, is it a good strategy to put buy stop and sell stop with reasonable TP before market news? Now, that's an interesting one. It's called the straddle trading strategy. All right, let me see if I can type that on the screen quickly. Oh no, sorry, let me clear that. All right, I'm going to type that out on the screen so that for those of you who want to do some research on it, all right, so that for those of you who want to do some research on it, you can easily do that. All right, so it's called straddle. Hold on. All right, it's called straddle trading. Okay, so setting pending orders right before the news is called straddle trading. Now, the only danger of that is this: So imagine that you saw the markets right before the news, and then you placed your pending order here. All right, and then another pending order. Let's say you had the other pending order here. All right, this is your buy stop, this is your sell stop. Okay, you'll discover that this movement that the market just made would have triggered your buy stop, all right, triggered your sell stop, and right now you will be at a loss. All right, right now your account will still be trading at a loss. All right, I don't know if you got that, or if you understood what I'm saying now. So that's why for me, straddle trading is risky, because at the end of the day, you don't have a complete say, all right, over your risk, or your entire risk. Yeah, that's the word. Okay, so 1717. All right, I think I have answered your question. So for me, straddle trading is a little bit risky, all right, because you really can't predict how the market is going to turn out, especially when there's extreme volatility. You could be getting stopped out on an absolutely great trade. Okay, on an absolutely great trade. So let's see. I'm just going to break down the market structure here and see if there's anything in it for us. All right, this is the supply zone. Yes, if price breaks that, then a retest of that area should be good enough as a buy signal. Okay, and I think this is the demand zone. So let's see which direction market breaks out into, and then, like I said, that box is what we're watching. Okay, so the breakout of this area, all right, between 1.08120 on Euro USD and this is 1.07314. All right, a breakout of that box is typically going to be the indication that we need either to go bullish or go bearish. All right, so let's see how this plays out. All right, Arvind Kumar, you want to learn something about Elliott wave. Well, Elliott wave is a little bit complex as a trading approach, and the reason is because when you start talking about Elliott wave and wave count theories in general, all right, like Elliott and Wyckoff, you're literally going to be talking about some really advanced concepts. All right, because when it comes to Elliott wave, you need to know whether you're counting the impulse waves, or you're counting whether it's the trend, all right, or the retracement. Okay, it's really important. And then you start saying, all right, if it's an actual trend, all right, it's a 5-week wave count. Okay, and if it's a correction move, it's a 3-wave count. 5 wave counts for trends is labeled 1 to 5, all right, but the 3-wave correction count is more than 1 to 5. All right, there's ABC, there's XYZ, there's WXYZ. All right, so Elliott's wave as an approach is for me is a bit complicated to learn. All right, especially not in a session like this. All right, if you're looking to learn Elliott's wave trading, you're going to need to get a mentor, someone who can sit down with you and put you through the entire process of the wave counts, the structure, the Fibonacci percentages, and all of that together. Okay, so I hope that I have answered your question, or at least responded to it a bit satisfactorily. All right, so I'm going to take 2 more questions. If you have questions, please drop them in the chat box. All right, and then we're going to address your questions. Just drop it in the live chat. And if you have not yet liked this stream, all right, if you have not yet liked this particular video, please, I'm begging you, do that right now. All right, please just go down there and click on the like button. All right, and also click on the notification bell so that you can be notified when next we have something sweet for you. All right, Happy, you're asking if gold is a buy or sell. The answer to that question is simple. I have given you a range, all right, a zone, to wait and see how price reacts from that zone. Okay, So typically what you're waiting for is to see what is going to happen in this zone. Okay, let price break out of that zone. If price breaks out bullish, you're looking for buys. If price breaks out bearish, you're looking for sell entries. All right, so it's literally as simple or as easy as that. Okay, what other question do we have? What other question? Like I said, you want to see a breakout. All right, so Harry, it's not about price approaching, it's about price actually breaking out of that area. All right, because until price breaks out of that area, there is no confirmation that that is where price is headed. What do I need to know to be profitable as a trader? There's a whole lot of things that you need to know. All right, Theo, there's a lot of things that you need to know. You need to learn how to control your emotions. You need to learn how to how to keep your biases focused. All right, you need to learn technical analysis. You need to learn a whole lot of other things. All right, you need proper mentorship. Okay, so the things you need to know are not just things that you can receive in a list. All right, I can't list out those things for you. Okay, so it's important that you relax a little bit and then let's watch how this plays out. Okay, so let's see. You said gold has broken out to the upside. Let me see. Naguchi, you said gold has broken out. I don't see that breakout yet. All right. Best content to suggest on trading psychology. I really wouldn't know. All right, I really wouldn't know. But I think there's this book, Trading in the Zone. You can search for it. It should give some clues into trading psychology, or at least assist you with building up your psychology. All right. So I think that's the only one that I can recall off the top of my head right now. Okay, and I believe that FBS also has some amazing content that can assist you with your psychology. All right, so you can also make do with those contents. All right, okay, so Euro USD has now clearly broken out to the upside. All right, I think gold has done the same thing, GU has done the same thing, which means that right now our bias on all of these commodities is bullish. All right, so the bias just changed. We're looking for buy entries. You can enter right now. All right, it's a bit risky, but you can do it. Okay, and then alternatively, you can wait for a retest of that zone. All right, so whichever works best for you. You can wait for price to retrace a little bit, and then you take your entries, or you can enter right about now, whichever one works for you. Okay. Are we doing that already? As you can see, it's already moving. Okay, it's already moving. So you can literally take your trade right now or wait for the retracement, whichever works best, like I've said a couple of times right now. Okay, so before I wrap up for tonight, okay, before I wrap up this particular stream, I understand that a couple of you may have had some difficulties with your trades. All right, you probably experienced some losses or whatever. Okay, I did too. As you can see, these were trades that I also took right here. All right, so I would like to say this is not the end of it. Okay, you can always get amazing entries over the next one. Okay, all right, you just have to keep trying. All right, I lost some money right now, but it doesn't mean that I'm going to quit trading. Okay, so for you, I would say don't stop, keep your head up, keep your chin high. All right, the next one could be your opportunity, the next one could be your opportunity. You never know. All right, so it's important that you put your mind to it, okay, and then work with it. 17, how long does it take to become a successful trader? I think I would say that depends on who your mentor is. All right, it depends on who your mentor is. It's like someone saying, oh, how long does it take to become to become a medical doctor? It depends on the country where the person is undergoing the study from and the level of study. All right, To get a bachelor's degree is different from what it takes to become a to bag a MS to become a doctor of medicine. All right, so the requirements are different across countries, across different institutions. Okay, so when it comes to all right, Judge Israel, how can you learn supply and demand strategy? Well, there's a free alternative. You can literally go around on YouTube, get videos on demand and supply. That works. All right. Conversely, you can also get a paid mentor. All right, someone who can sit down with you, put you through, and help you learn all the ropes of how these things work. Okay. 17. Where can you get a good mentorship? If you are in the FBS loyalty program, you can get to schedule a session, at least I think one session with one of the analysts. All right. If you are not on the loyalty program, then you can just literally search around for verified mentors who have students that have results, all right, or whose results you can see for yourself. All right, so I think that would be all for tonight's stream. All right, so once again, I want to say thank you guys for joining. All right, the next live trading session is going to be on the Telegram group, all right, on the Telegram channel. I don't know what date yet, but definitely the date will be communicated to you right before the stream. All right, so you guys will get to know about the stream as soon as we have a date for it. What should be the target on gold? Let me see. If you're buying gold, what should be your target? Hold on, let me see if I can give you that quickly right now. All right, the safest target on gold right now would be 1906.87. 1906.87 is the best point to target for your gold right now. That's the safest. All right, but I think that if gold continues bullish, we may get to see gold get to 1927 or 1928. We may get to see gold get all the way to 1928. All right, so that is my submission for today. All right, so and on behalf of everyone who put this together, and on behalf of all of you that are here on this call right now, I want to say a big thank you for joining me. Thank you for your time. Thank you for trusting us. Thank you for being our clients. Thank you for being our customers. And I look forward to seeing you once again in the next one. All right. So on this note, I say thank you and bye-bye.